Looks bad. Bitcoin futures echo days before March crash, says trader. Is Bitcoin going to see one final 30 to 50% flash crash before this 2.5-year symmetrical triangle completes and we absolutely go off to blast off city? We'll take a look at some very interesting data that might support the idea of Bitcoin having one final very strong and very fast flash crash here on these charts, but we'll also show you something extremely interesting here on this weekly chart about the position that Bitcoin is currently finding itself and what that could mean for the price in the very short term. And as well, we'll do some shorter term technical analysis for Bitcoin as we're currently finding support on this 21 daily moving average. Just how important is it? Still kind of squinched and squeezed between this 21 and 50-day moving average here on the daily chart. And even earlier today, another strong bounce on this ascending triangle bottom. Very strong still, and this leads us into a bullish argument. We want to counter this very bearish argument with as well a bullish side as well. So we're going to be taking a look at both and which one seems more realistic. Wow, and the Bitcoin CME futures, according to FilbFilb, is actually saying here it's not looking good, almost identical to the drop that we saw very recently where Bitcoin's price dropped dramatically. Let's get charting. Wow, welcome back to an extremely late night webisode special edition for Bitcoin. Today we're going to be looking at a very bearish scenario because I've been getting so many comments from you guys asking me to take a look into this scenario. And as well, there is some fundamental data that we can take a look at in this webisode to potentially support that as well. So a lot to get into with that. And as well, we're going to be doing some shorter term technical analysis as well. And we're going to be talking a little bit towards the end of the video about altcoins and what exactly is going on in the altcoin market cap. Wow! So guys, thanks so much for joining me here for this special late night episode. If you want to enter for this ledger, make sure to smash the dings, comments, turn on the likes, and if we can hit 1,000 likes in this video, we'll be giving this away in the next webisode. We got so close in the last one, but yeah, if we can hit 1,000 in this one, we'll do that one in this one. Okay guys, huge. So we can actually start off with this bearish scenario, and we want to start off with this fundamental data, and then we'll get into my own charts here. But we have FilbFilb here saying that Bitcoin CME futures looks bad. He's not going to lie. It's almost identical positioning as the big drop last time, in a clear descending triangle full of wicks at resistance trading below the point of control. He's talking about this VPVR on the right that I'm highlighting with my mouse is the VPVR, and this red line used on the VPVR is called the POC, or the point of control. So you see us trading below that here on this weekly chart that he has pulled up. And you can see here the indicator BTC COT with a similar positioning here as back in early March, right before March, where the flash crash happened on March 12th. Now, that was different for a few reasons. However, he does make a comment down here, reply to somebody saying it's not about fundamental market correlation with the global markets. He's more talking about technical analysis with Bitcoin here. Whereas back in March had very little to do with actual technical analysis and had more to do with the global economy and the crash. However, he's saying this time we could see something similar in terms of a move, but it wouldn't be correlated 100% with stocks and the rest of the entire world and other assets. And as well, that plays very nicely into this theory, but we're going to get into something else on a weekly chart. This is just the daily here for Bittrex. You guys have probably seen this very much, the inverse head and shoulders here. And we actually could see easily a retracement over at least 30% to complete a right shoulder here. But this scenario gets less and less likely, and we'll talk about why when we get into the bullish scenario here in this video. However, realistically, a 50% pullback, I think, would have to be a very strong wick, and I think that's what he would suggest there as well. It would be a flash crash, meaning it could have a very nice recovery, similar to what we saw on March 12th, where technically we only got a close. We never closed below, roughly, a little under $5,000, but it wicked all the way down to under $4,000. So a big discrepancy there. But those wicks can be very massive in flash crashes. Specifically, with a flash crash, you can see these massive wicks off of these candles because it happens so rapidly and it finds support pretty much immediately. And once it does, it just absolutely surges back up almost as fast as it crashed. And as well, what I want to point out here on Bitcoin's weekly chart is very interesting here. If you take it to the weekly and if you draw this symmetrical triangle, one thing you've noticed, because we've been trading sideways for so long at this point, is this. We've just been trading sideways ever since the end of April, okay? So a very long time to be trading in these markets sideways. But because of that, you take a look and you connect all of these weekly candles, okay, going all the way back to December of 2017, and then we connect back in the summer of 2019. You see this is where we connect with this descending line at the top of this symmetrical triangle. Really not getting any weekly closes above this. Same thing here, a lot of resistance right around here. But now what's interesting is that we've seemingly found support actually on top of this for the past 6 weeks. Okay, going all the way back to June 1st, we've been trading above this now. So even though we have not had a very massive breakout at all, you can even see the volume here. It is not going up. The volume is still declining. Even though that is the case, because we've traded sideways so long, and this happens fairly often actually, when we trade sideways so long that these patterns, as they're playing out, this line gets lower and lower every single day, every single hour, and every second. Technically, this line is going down. However, when we're trading sideways, we're basically breaking through it by just trading sideways as time elapses there. So that's very interesting. We have not seen any sort of powerful break at all. There's not technically been a breakout at all. However, if this continues, this could actually lend itself to a more bullish scenario because we're still trading above this resistance for the past 2.5 years now, as of the past few weeks. Now, if we switch to the shorter time frame, you can see here on the daily chart here on Bittrex, 21 and 50-day moving averages is where we're still squinched and squeezed right in this area here, seemingly actually finding a bounce within the last hour, actually right on this 21 yet again. Now, the main things we want to hold, though, are this. This wouldn't really matter if we come back below this, in my opinion. The main thing we want to hold here is the 21 weekly moving average, the most powerful weekly moving average we have to be looking at right now. And this is right around 8,200, which is an area we've been calling forever. If we break below the 88 concretely, we've been saying we'll most likely come down to that 82, but we have not done that yet. So we can't even test that theory because we remain above this 8,800 very strongly. You can see the last time we wicked down was all the way back on June 27th, and it got an extremely quick wick. You can see came down for a single daily candle and then closed, over 50% of what that candle was. So still remaining really strong above 88. But again, guys, it still goes back to that theory. If we break the 88 concretely, then that's when I think some of these much bigger downside scenarios come into play. However, none of them are even on the table really until we get that 88. If there's one downside target I'm looking at, it's going to be 88, because if 88 gets breached concretely, then I think we could easily go a lot lower, but we need to do that first. Same thing here with this ascending triangle, guys. You can see on this daily candle, actually, yet again, we come all the way down exactly to this bottom of the ascending triangle, right around 9,100, and bounce right back up. In fact, it's a little bit green now. We were red most of the entire day, and now we're actually in sort of a green territory, bouncing yet again. It's actually incredible just how many daily touches we have with this line. 1, 2, 3 right here, 1, 2, 3, another one here. Okay, that's already 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 daily candle touches already, and we've been trading in this since April 29th. So in the past 2.5 months, we have had almost 2 weeks worth of daily candles that have literally bounced right on this line. Okay, so again, very interesting thing to note, and most importantly, what we're watching for here is this 2.5-year resistance right here, this green line, in the bottom of this ascending triangle, because we're running out of time here. You can see not much more room to be traded in here. The very latest, it looks like July 24th roughly, before there would be no more room, and I think we'd have to have a big decision here. But other than that, support remains strong here on this daily chart. Same thing with this descending channel here. It still looks like it wants to break up. You see, as we broke this line right here, we got a nice little green spike going up a little bit, but we found some resistance right here on the 21 moving average on this chart. And as well, you guys, if we switch to the weekly for every single cryptocurrency excluding Bitcoin, so everything except Bitcoin, the entire altcoin market cap, as well, something similar that we see to Bitcoin, we're trading above that 2.5-year resistance now. We've been for these altcoins for a while, but it's also interesting to see with Bitcoin specifically, we're also very slightly trading above it right here. And again, this actually depends on how you draw it. Some people will argue and say we're not anywhere near it, and some people will say we broke it even further back than what I'm saying here. Okay, huge, guys. And as well, if we go to the weekly here, this is the RSI on the weekly. You can see this oversold area right around the 30 line. We touched that once back in December of 2018, and that was back kind of around that big crash for Bitcoin. Correlates to this, the massive crash here. Okay, so that RSI around that area here. But if we pull this back up, what we're doing right now is trying to identify support here on the RSI where it was previous resistance. You can see pretty strong resistance here, pretty quick bounce back. Got a rejection here as well back in February of 2018. And you guys can see this used to be a lot of support. You can see from 2015, 16 to 17 and going into 18, this 53 roughly was massive, massive support, and we're trying to do the same thing here. Okay, we've been finding some pretty good support here over the past 3 months where we've been trading sideways. But yeah, we could see an acceleration one way or the other if the momentum actually keeps up here. And as well, if you're looking for a new place to buy some cryptos, check out the Crypto.com app where you can get a nice bonus. And as well, if you're looking to trade cryptocurrencies, check out the links pinned in the description as well. Now guys, I wanted to jump into this Cointelegraph article by William Suberg. Okay, looks bad, Bitcoin futures echoes days before March crash. So basically he's just highlighting that tweet that I was talking about earlier, but I want to cover some of what he's saying in this article in reference to Philby, or Philb, I'm not sure how he says that. What he's talking about is the commitment of traders, or the COT, both retail and institutional, had maneuvered to exactly the same place that it was just in days prior to the crash back in March, or early March, late February. It's updated on Fridays using data from the previous Tuesday. As such, the metric gives a snapshot of the status quo several days previously. It's seen mixed price action, and a drop late Thursday took Bitcoin back to $9,000 support. So basically says here, this is quoted by Philb here, the positioning of the big players began 8.5 to 10.5K last time, and that was before the climate took a nosebleed. These guys are short here on technicals rather than the external risk, he's saying. And that's basically what I echoed. It's most likely not going to be caused by another global problem, but just based on maybe Bitcoin's technicals themselves. Which, if that did actually happen, again, I think that would make it even a less volatile move than we saw back in March. And I think a lot of people expect that as well. A lot of people expecting some downside are also accepting the fact that if we do get that downside, it's probably not going to be anywhere near as drastic as it was back in March. Okay, there was a lot of factors and very fundamental reasons why that was so powerful for Bitcoin and stocks in the entire world. Okay, huge. So make sure to smash your comment below. Do you think we'll remain above this symmetrical triangle, or do you think it's possible that we could see a similar situation to where we actually come down and wick back up and end up finding support ultimately back here on this 200 week moving average, the second most important in the short term, in my opinion, weekly moving average, right below the 21. But again, the 200 weekly absolutely has to hold. That was the moving average everybody was looking at back in March when this catastrophe happened. And when we were significantly below it, everybody was panicking, rightfully so, because that is a huge moving average. It has marked bottoms for markets for a very long time. And it's just probably, in a bear scenario, it's the most important thing you have to look at when we're turning very bearish. So when we had two weekly closes basically right on the 200 weekly moving average, that was reassuring for the market. And again, obviously it helped continue it upward, rally to the top of the symmetrical triangle. But guys, even more importantly, what you notice, there is not much room left. Okay, we are going to see a massive 2.5-year symmetrical triangle. The entire Bitcoin market is about to explode, and it is going to happen basically sometime this year, in my opinion. This only goes out to the end of this year. According to how I have it drawn, this only goes out until maybe like the first week of 2021, but it's very likely it will break out of this months before we reach the end of this. Okay, so it could happen in this area, most likely is when it's going to happen, and it was going to be explosive whenever it does break. This is the most macro pattern we have on Bitcoin's chart, so it's going to get explosive whenever it finally does erupt. Huge. So let me know what you think below, guys. Make sure to leave your comment. Make sure to smash up the like so we can give away one of these ledgers in the next episode. Just hit 1,000 likes there. Guys, make sure to check out the links pinned in the comments and description. We have a lot going on here. Still rolling out a lot of updates for T4 V4, but if you're interested in trading and charting and all kinds of different data, guys, you can check it out below. There's a bunch of information here. Check out the pinned comments below. And as well, there's only a few days left. If you guys want 20% off a Ledger Nano X, just use the link below and then vote for your cryptocurrency. You get 20% off at checkout. And absolutely huge, guys. Thanks so much for watching. I'll see you in the next one. Peace.